So Dogecoin has crashed massively along with the overall crypto market. And in this video, I'll talk about why Doge has crashed and where we are headed from here. But before coming to Doge, let's see the overall crypto market standings for a minute. So the crypto market has slumped once again by wiping out more than $350 billion of the entire market cap. The overall crypto market is currently under immense pressure as the market cap has fallen 15% to only $2.2 trillion. In addition, the Bitcoin Fear and Greed Index has fallen to 25, implying there is extreme fear in the market right now. Moreover, Bitcoin's price has plunged more than 15% to a low of $47,000 in the last 24 hours. And things are not looking so good now as massive overhead pressure could cause a deeper correction that could force Bitcoin bulls to retreat towards the September 21 low just above the 40K psychological level. Meanwhile, Ethereum's price also plummeted, falling more than 10% to a low near $3,900. All in all, we are now seeing a flash crash in the crypto market. But before I talk about why the market has crashed, let's see what is happening with Dogecoin. So the current crypto market sell-off is market-wide and includes almost every crypto. And Doge is one of those who took the major dent as it has fallen by almost 20% in the last 24 hours and is now trading around the 16 cents mark. We may like it or not, but as the market goes, so goes cryptos like Dogecoin. However, it's interesting that Dogecoin hasn't fallen even farther given the general volatility we have seen in the crypto market recently. But I wouldn't expect a quick recovery unless the overall market recovers. Meanwhile, it appears that investors hoping that investing in cryptos would be some kind of hedge against market volatility have likely been disappointed. But why Doge and other cryptos are crashing? Well, the ongoing market correction comes as uncertainties surrounding the Omicron COVID variant spread across the global market. While the U.S. stock market stayed under pressure over the last week, it is now evident that the spillover has been spread to other markets, including the crypto market. In addition, data from on-chain metrics indicates that the total balance in the Bitcoin accumulation addresses witnessed a sharp drop. This is an indication that there were warning signs based on exchange activity in the recent past pointing to the current price dip. Moreover, as I said, investors are now clearly concerned at the emergence of a new COVID-19 variant and also come hawkish comments from the Federal Reserve Chair Jerome Powell. So it is now clear that the crypto and U.S. stocks fell following Federal Reserve Chair Jerome Powell's statement that it may be time to phase out the term transitory as a way of explaining inflation. We know that Powell and other central bank officials have repeatedly used that term transitory over the last 7 months to suggest that the pressures driving recent consumer price increases may abate as the economy recovers from coronavirus-related lockdowns. So Powell's shift is indicating that authorities now view inflationary pressures as more persistent and so less willing to continue the loose monetary policies that have boosted markets for risky assets, including cryptos. And we also know that investors consider cryptos like Bitcoin a hedge against inflation. However, because crypto is also viewed as a volatile asset, some investors might have turned away from crypto, resulting in the current flash crash. Meanwhile, veteran investment icon Charlie Munger added to the fire by comparing the price action in the crypto market to the dot-com era that ended with the bubble popping. Munger described the current crypto investment climate as a touch more extreme and stated that he would never join in this crazy crypto bubble. More intriguingly, Munger applauded China's decision to completely outlaw crypto. So whether it is new COVID variant concerns, Fed chair's comments, or traditional investors bashing out on crypto, I think all these things have led to this massive market-wide crypto crash. However, the current market crash doesn't mean that this is the end for cryptos. Some minor recoveries are being tried as of now. While it is unknown how much further this market may fall, we should keep an eye out since these types of moves can very easily reverse and result in a tremendous surge. In addition, after his proprietary floor model displayed near-perfect performance in August, September, and October, Plan B's model performed terribly during November. And now seeing the current market crash, it appears that his prediction for Bitcoin hitting the 100K mark this December is also going to fail. But Plan B believes that his stock-to-flow model is still alive, and while Bitcoin may not end this year hitting 100K, but it is still poised to go past the $60,000 level, rebounding from the ongoing market correction. Plan B believes that the current market crash does not affect his S2F model. The S2F model, which aims to predict Bitcoin's value by taking into account the rate of stock production, is often appreciated for focusing on scarcity and demand. So considering this, I think that we can expect Bitcoin to rebound from here. And if Bitcoin manages to do it, the overall crypto market will also rebound from this recent flash crash. And with that being said, let's come to some important crypto updates. So the crypto market bloodbath might have caused havoc for traders, but it turned out to be a perfect opportunity for El Salvador to buy another dip. President Nayib Bukele recently took to Twitter to announce that El Salvador has purchased 150 more Bitcoin tokens at an average price of $48,670 during the recent market crash. Previously, the president declared on October 28 that he had purchased 420 Bitcoin during a temporary bear market. So it appears that El Salvador has made it a tradition to buy the Bitcoin dips ever since it became the first country to make Bitcoin a legal tender in September. The nation has made a series of Bitcoin purchases since September, and President Bukele has nailed the market bottom on most occasions. In addition, the Salvadoran government's game plan is for removing unrealized Bitcoin gains in US dollars to fund various developmental projects while maintaining the Central Reserve's total worth. So we are now seeing that crypto adoption is accelerating, and the market has seen a slew of new prominent players in recent months. One such individual is Anthony Scaramucci of Skybridge Capital, who recently stated that he put $1.3 billion out of a $9 billion portfolio in crypto. However, Scaramucci is not new to crypto. He recently boosted his investment by over 150%, sparking a firestorm of debate. He noted that a significant portion of it is due to price appreciation, as Bitcoin recovered from $29K in mid-May to around $50K. Additionally, he stated that another factor contributing to the rising interest in crypto is the ETF CRPT, which is a crypto ecosystem ETF. Scaramucci also revealed that a new $2 million crypto fund is set to start next week in Abu Dhabi with a mix of private equity and crypto features. And talking about crypto adoption, Unbanked, a global fintech company that connects traditional enterprise and banking systems to blockchain technology, has launched a crypto-based holiday fundraising campaign for Toys for Tots, a U.S. Marine Corps program that collects new, unwrapped toys and distributes them to less fortunate children in local communities. For this initiative, Unbanked will host a crypto payment profile that will enable donors to donate in 28 different digital currencies, including Bitcoin, Ethereum, Litecoin, and others. This feature was recently added to the company's crypto-friendly debit card and global bank accounts in order to simplify financial transactions using blockchain more seamlessly. So it is good to see the use of crypto for charitable causes, and I think that the benefits of blockchain and cryptos are for every sector as shown by this initiative. And now coming to our next update, Norway-based Norwegian Block Exchange has recently stated that it would become the first crypto platform in the Nordic region to list its shares on the pan-European Euronext stock exchange. The crypto exchange currently lists 8 cryptos and offers approximately 20 trading pairings. The exchange also has been approved and is regulated by Norway's Financial Supervisory Authority. And seeing that the crypto acceptance of the Nordics has been slow, I think this is an important development that will eventually fast-track the crypto adoption process in the region. And now, as we are done with these updates, let's come to Doge and see where we are headed from here. So as I said earlier, Dogecoin has taken the toll of the overall crypto market crash as it has been down by 20%, a significant fall that has concerned Doge holders. However, it is highly expected that this market crash is not going to last for a longer term. So we can expect Doge and the broader crypto market to rebound from here and gain momentum in the longer run. Meanwhile, as I stated that Plan B's S2F model is still intact, indicating that Bitcoin can hit the 60K level by the end of December, it is highly likely that Doge will follow suit. This is because Dogecoin's correlation with Bitcoin is still on the high side. It is currently sitting above the 0.9 mark. So it is clear that if Bitcoin rallies up by the end of December, Doge will follow suit, and this will bring the end to the recent market crash.